Welcome back, everybody. We should be live. Let me just check that we are. Can everybody see me? Can everybody hear me? A little technical check. All right, so let's have a look at what's going on. We have some new features on Topstep. So now when you hover over your combine on Topstep, you will see an additional little pencil thingy. So if you click there, you can actually edit the account name. So if you ever found yourself in a position where you're trading the wrong account, this is going to sort that out. So for example, right now, this particular combine, it's my London copper trades for the most part. So London metals, right? London copper. Actually, let's do it capitals. There we go. So now, in the drop down, you can actually see it say London Copper. So there's no mistake over which account you're actually trading. So this should help with those Muppety moments where you're in a practice account or you're not really sure which account you're trading if you've got more than one. So it's a pretty exciting feature. It's something that I've been wanting for quite a long time because I frequently, if I have multiple combines, I will run different, slightly different strategies on every single one of those rather than copy trading. And I run them for like tests and stuff. So obviously sometimes I have to like refer to my notes. It's like, which one was I doing? Like, what was this one? Because, it's very difficult with long names, and then every time, you get a reset or something, then there's a new number. So, this sorts it all out. So it's pretty cool. Check it out, okay? Okay, so let's have a look at what's going on in copper. I'm just going to go to my charting platform. So we have an open below value. Attempt at going higher, but ultimately stopping at Tokyo high. So I'm just going to switch through to the Tokyo session or Asian session, however you want to call it. So this was Asia high, right? So we failed to go above that, and that can be a sign of a bearish market. When you couple it with the fact that we tried to go into value and then failed to do so, that's another bearish sign. We do have a little bit of a failed auction here, but I'm actually going to try going short. Because we have VWAP here. This is overnight VWAP. That's what I use for London. So let's try a little feeler short. Yeah. A little bit risky to do a momentum trade on FOMC week and NFP week, and also during the summer months. But I have nothing else really to back the other side at the moment. So let's see if we can give some follow through. And then on the ladder, it looks pretty heavy. So we have a lot of orders that are kind of sat right under VWAP, right? So the idea here for this trade is that the sustained auction is going to happen and that these orders are going to act as effectively a roadblock to any further upside. Now, if I see them disappearing, if I see very big buyers stepping in, big bubbles, big bulls, then we might reconsider, and I might want to try something else. But for now, this is the most obvious outlook for this particular product. We still need to see some initiation around this VWAP to the downside. So obviously if I don't get that, then that would be it, which is why I'm not using a big stop, and I'm not using 2 or 3 or 4 or 5 contracts. I'm literally just using one. And if that one doesn't work out, then we're going to sit on our hands for a bit. But this is, for now, the most obvious trade. So I'm going to place that. Somehow I like my Topstep X to be on the left, and then my charting to be on the right. Okay. How is everybody doing? I know the markets have been a little bit difficult during the New York session. I certainly find London to be much easier at the moment, easier to read, easier to trade. And for copper, it's actually been moving really well for Asia and London, and then it sort of dies out in New York. So, yeah. Like I said, we have FOMC week as well. Sorry, I'm just still adjusting my charts here. So FOMC and NFP week all in one go can be a little bit quiet and weird sometimes, range bound. But London session sort of has its own mindset, so to speak, and an entirely different set of releases. So you can actually find some pretty good movement, and then when USA starts waking up, suddenly they're like, no, we're not trading, we're just waiting. So there's definitely different players involved. You can see their personalities, you can see their intentions. So let's have a look at some other markets here. Take a look at silver, Michelle Ryan says. Okay. Let's have a look at silver. Sorry for the white charts. I know they're a bit of an eyesore, but I sometimes find them easier. Silver on a weekly chart, we are arriving at an area of a demand level. A little bit of accumulation happening on the daily chart. But still some troublesome areas to get through, specifically around 28. Are we still in September in silver? Can somebody let me know? Because I haven't actually actively traded silver recently. So yeah, we have in the September contract, we have potential roadblock at 28,071 that we need to get rid of. Again, 4-hour chart showing that accumulation potential. And then today, very similar outlook on the profile for silver, opening slightly below value. So that means a slight imbalance to the downside. So far, attempts to go higher have been unsuccessful. It's very quiet this morning. So this wouldn't necessarily be my first choice for trading, because I can see that, I mean, it's only a fraction of the movement that we normally see in silver. So I would hold off on the silver for today. There's just nothing's happening. It's like they've chopped around a bit before London, and now we've just gone into a complete sideways movement. So that's not really appealing to me. But it's opening below value. You know, there's potential for value acceptance upside, which would be more in line with what we see on the daily chart with that accumulation. I call that phase 1 rather than accumulation, because it's like phase 1, phase 3. Did we drop before and then accumulating potentially? Then you typically see a reversal at a rate of about 65-70%. Then it sort of goes into a bit of an uptrend, then distributes, and then turns around. That can happen in a downtrend or in an uptrend. It is not connected to any trends. It's just the way market movement happens. So yeah, silver not really that appealing to me right now. Potential for upside, let's put it that way. Let's see what the releases bring this week. Joe says, daily range and session ranges for the current session or the previous day. Daily range and session ranges are all pertaining to the current day's levels, but taken from an average of previous 10 days or previous 10 sessions. So my twist on the ADR is a SR, which only takes the regular trading hours and then goes back 10 days to find an average and then starts plotting it as the market starts moving up and down, creating new session highs, session lows. So we can subtract or add until that average, mean average number is reached. So hopefully that's a bit more clear. It is a dynamic measure until one side hits. Right, we're getting a bit of movement now in copper. They've woken up, they've had some coffee, and I'm going to do the same. Lido says, sleep is for the weak. Yeah, I would argue against that. I need my sleep. Alexander says, is this the volatility time for copper or silver? Well, not really for silver. I find silver moves better for COMEX, but copper has absolutely been moving really nicely for Asia and London. And then I actually got chopped up in my live account trying to trade silver yesterday. And I'm considering only doing my live account during London, but I still want to pass this this combine just to make sure that, you know, we do have something that's been going on for about 3 weeks, not just a fluke for a couple of weeks, and then, you know, I can move in. But I thought to myself, oh yeah, you know, I think I see a very good setup. And then I tried to go into a failed auction. Didn't happen. I sat in a trade for 90 minutes. And after a nice movement during London, I was like, oh, this is going to be great because, you know, finally movement. You know how guests who come on Topstep for like power hour, they sometimes go, oh, whenever I turn up, I kill all liquidity. That's how I've been feeling for the New York session for like the last week. Every time I touched anything, it just died on me. So I'm like, what? Like, why? And it's like, it's the summertime, you know, I'm very aware that during the summer, movement and momentum is very sketchy. So for some reason, London has been moving exquisitely well. And yet we hit COMEX and copper just dies a death. And that's exactly what happened. And then I kind of tried to catch it in these wicks. And sadly, my stop loss wasn't big enough. And then it just went up as I wanted it to, but I wasn't in on it. So that's how it goes sometimes. So yeah, London, much easier for me right now to trade. It's got smoother movement, smoother momentum. I mean, look at this. That you can't ask for anything prettier, right? You have attempt at a value acceptance, failure, and then a nice smooth move down. It's beautiful. Now, how far it goes, that's something that we cannot control. And this is where we have to start controlling our risk, because now it's kind of moving. But right now, even on a 2-minute chart, when I'm looking at it, I don't really have a good way to limit risk here, apart from the original stop loss that I have. I mean, maybe I can put it sort of right above VWAP, because we shouldn't, like if this is a committed move to the downside, we shouldn't really go above VWAP. Let me just see if I'm not blocking that. Yeah, so I put VWAP on this Topstep chart so that everybody can see. I always have my VWAP in sort of purplish colors. And yeah, so far we're underneath VWAP, underneath 9 EMA. And you know, for these sort of trades, sometimes you do have to let them breathe before before you kind of start moving your stops and stuff, if that's what you're after. I'm generally not in favor of moving stops, but because I'm doing this session, I'm kind of talking and trying to read chat and questions and everything. It sometimes I sort of kind of get sidetracked, and then I start explaining a concept, and I totally forget that I'm in a trade. So I do need to be a little bit mindful of that. But it's early. Let's put it that way. Let's see some more questions. Carl Hungers. Hey, how you doing, man? Loved that meme for Andre. It was so funny. Like I knew you were gonna latch on to that one. NQ moving, just ripped 50 points in 10 minutes. Yeah, this will happen in NQ. It's been moving all evening. I hate NQ with passion, even though during London it's a little bit more acceptable because it doesn't have those nervous intra candles stuff that happens during the New York session. And that's the thing that I don't like about it, because I feel like you've kind of like had too much coffee or something, and it's just like everything's jittery. So during London it's pretty smooth, right? So one problem that I have with it is that on most days you get stuck in an 18-point range, and it's just painful. Right now we have a neutral day type. We have the London value low at 192.47. I'm not going to be trading this because I'm focusing the combine on copper only for experimental purposes, because I haven't traded copper that much. I might have placed like 1 or 2 trades, and it is a metal, so I do see that it moves in a very similar way to gold and silver, which I have traded before. And again, Carl is here. Thank you, Carl, for getting copper onto my radar. Power of the community. It's one of the reasons why I love prop, because I wouldn't have even found crude oil if it wasn't for prop firms. So there's some danger here that we go into value acceptance and then into a sort of a neutral but asymmetrical day, which typically looks like a trending day, but with a wrong initial balance extension to the other side, right? So they sort of tried to fight business, failed, and then went back up. So that's definitely a possibility with NQ, considering that it's an equity index. However, because it's a neutral day type and because the value low can be actually a very good reversal area, there's also a chance that we get stuck in a neutral day. So you're basically, for London, working with these 52 handles. And usually how I like to approach these is to go to a very low time frame and then to look for equity volume candles. Let's drag some over. Just going to duplicate the window here and then get NQ over. Let's see what that looks like. So we are actually quite far away from VWAP, and one thing that opens up the possibility at value low is the mean reversion down to VWAP from value low, right? So I think that's what's happening right now. So actually a short in NASDAQ down to VWAP at 19170 is actually a pretty good trade. It's a mean reversion trade. I think this would be something that Anne-Marie would typically do. And it's something that I would do with the help of some of my other levels, like value low, for example. But yeah, I'm not an NQ trader, so we're not going to be talking NQ. I think we have a lot of NQ coverage during fast markets and during the main segment, because a ton of people trade it. The London session is here to bring you something new, something alternative to the markets that are heavily traded over there. And even though NQ can be a good mover for London sometimes, for the majority of the times it's actually not the best choice, because it gets horrendously quiet, and that goes for ES as well. So let's try and stick away from equities here and just to have a bit of a twist for the Londoners. When we get Eurex, we can have a look at DAX to some more serious, give it some more serious attention. Right now, DAX is below value as well, but it is attempting to go higher from VWAP, which is the overnight VWAP. So I wouldn't be, for now, doing any shorts because of that. There was a little bit of a failed auction as well. So I'm running that in my my own company account. Because I don't have like a personal account, because personal account tax in the UK is like 40%. So all of my trading activities are run through an LTD company, which is kind of similar to LLC. So yeah, so I'm doing that. And I would expect to see some upward movement somewhere. So yeah. Okay, let's have a look at more questions. What is this software currently on the screen? Well, obviously I have Topstep on the left, which is my execution platform. I like to have the dome on there to make sure that I'm seeing the ladder. Even though I do have bookmap, sometimes I actually like to look at a very simple ladder, because if my eyes are tired, it's kind of easy to see like a really big sticky outy area that is just on a single price. I find that sometimes easier. But yeah, for my charting, stuff that you see over here, that is all MetaTrader 5 from AMP Futures. AMP Futures is a great brokerage. They probably have the cheapest commissions in the business from that brokerage side of things. And all of the indicators that you see are the indicators from my company called Blatec. They're a software development firm. My flagship indicators are Blatec MP, which stands for Market Profile, not Michael Patak. Blatec DR, which is Blatec Daily Range. That's the lines that you see here. I don't know how well that shows up on the stream. Actually, it's not too bad. So these lines, and then also the average daily range lines, which are a little bit further out today, indicating a range contraction. And also this little panel where you have individual session schedule. So it's something that I needed as a trader, and then we sort of made it into a little business from there on out, because the guy that I hired to do the indicators decided that he wanted to get out of the corporate world, and then we partnered up, and that's how Blatec came about. I already had Market Stalkers. He decided to blend the two companies together, and he has a lot more of a business mindset than I do. I'm just like former musician who was an entrepreneur, but you know, I'm not particularly great at like the whole like hard sell and stuff. So I'm just like very technical, very nerdy, you know. And he's like, oh, we should be doing this and that. And I'm like, okay, fine. But yeah, so that's the story behind that. Those are my indicators, or our indicators. He has a great background as a software architect and team lead in bulge bracket firms in the UK. So he's worked for Barclays Capital, he's worked for Credit Suisse, and he's done like startups before then. They got acquired by Infosys, which is a massive company. So yeah, I'm very, very lucky to have him on the retail side of things, because when I was looking for somebody to code up these indicators, there was nothing like it on the market. And I still think that like, for example, this graphical overlay, there are a lot of firms that have actually now copied that from us. So we came up with this indicator in like 2015, and we were working on it from 2014. So we've been around for a while on that side. And yeah, it was just something that I needed. And actually the story behind AMP and how we came about to even use AMP for our trading stuff. The CEO of AMP actually asked us if we could modify and do some development for them for the market profile, because he was actually looking for somebody who already has a market profile, and he approached us. So it's a cool little story there. And the reason why our Blatec MP looks the way it does is partly because of AMP CEO, because he had some suggestions and stuff, and we took that on board, and now we have a pretty nifty market profile indicator for MetaTrader 5. Now, I know that a lot of people from Forex are like on MetaTrader 4. We are on both, but MetaTrader 5 was supposed to be the meta quotes attempt at futures. So this is why AMP Futures has MetaTrader 5 and not the other one. However, I think it was a somewhat a failed attempt, but I'm a bit set in my ways, and I actually really think that we've done a pretty good job with these indicators, so I keep using them. I don't want to use anything else. Every time I try to use somebody else's tool, I'm like, oh God, really? So I get annoyed very quickly. When you've had the chance to commission a piece of software exactly like you wanted it, it's really difficult to then move away from that because some of the other tools don't have the functionality that we have. It was very nice to be able to just go, hey, Keita, can you get me the volume profile at the click of a button where I can see a whole week's worth of volume. And he goes, yeah, sure. When do you need it? And I'm like, yesterday. And then you go like this. And now you have the volume profile from the entire week. So 7 days or whatever it is. So this is taking on all of the previous week and plotting it here with its own value area. So this is something that I wanted without having to do a whole bunch of stuff. We have hotkeys, we have everything. So very, very difficult for me to move away from this at this point. But we are kind of working on some other platforms now as well. So we'll see what next year brings, I suppose. Copper is moving really nicely. So that's pretty drama-free. Avi wants to know, Deeyana, can you show how to set up charts like you have on the screen? So VWAP is always very simple. It's just on Topstep, the way I set this up, I literally just went into indicators, and VWAP is something that everybody uses, so I just went VWAP and then it plotted it on the chart. I then right-clicked and just went into settings to adjust the color and the thickness. Color and thickness. Very simple. Like, one thing about Topstep is that it's so intuitive. I mean, it's probably the most intuitive platform that I've ever used in my life. The learning curve. I know that we've had like bugs and stuff and everything, but the fact that they brought out a platform in such a short space of time. Do you guys know how long it takes to code these platforms? Like, it takes years to get them like to stage one. And, Michael Patak has done this with the development team in the space of about 10 months. So, I do urge you to be patient whenever something happens. They will always make it right because it is a platform in development, but it's clean, it's intuitive, it's great. So, I'm looking forward to them adding more functionality to it. Now, if you want to set up my charts like the ones that I have here, I'm not going to go into that right now because I could probably be here forever. But there is a Blatek website, blatek.co.uk. That's blahtech.co.uk. And there's an installation thing. There's a whole bunch of instructions. So if you want to see how to set these up, and there's also a video that I made, how I stack my indicators on AMP MetaTrader 5. So that's on my channel. But yeah, let's not go into that right now because there are resources out there that you can have a look, and it's all explained nicely. Coach Jay, have you been trading CL lately, Dee? No. So, and great to see you here, Jay. I'm very, very pleased that you're up this early. Sorry for the lack of sleep, if that's the case. So I haven't been trading CL. I've been waiting for its VIX to kind of climb up over 35 when we get some more favorable conditions. I've had some okay trades in it, but I find that I have to nitpick too much over stop losses. And then most of my trades, while they did have a high risk reward, I felt really uncomfortable doing them because of the small stop loss. I usually like to use like 30 to 35 ticks on crude oil, just because sometimes crude oil has those stop runs. Like, I'm pretty sure you've seen them. And unfortunately, if I'm running a tight stop, I have to snipe it from the stop run. Now, my life can get really busy throughout the day, and I've kind of gotten used to not sniping things and just having to like be so locked into charts was really stressing me out. So I've actually moved away from it. I might go back to it at some point, but like I said, right now, OVIX, which is the oil VIX, is sitting at 30. So we're better than like whatever it was. I think we were at like 20 for a long time. Now this is just the CBOE crude oil volatility index, and if you can see, let's go 5 days. So can you see that? Yeah. So if you can see here, like anytime we fall under 35, I find crude oil very difficult to trade. And the movement gets all sketchy, and you get stuck in 100-tick ranges, and then most of those 100 ticks are done in like one 30-minute candle, and then for the rest of the session you stay locked in a tiny 30-tick range. Very painful to trade. So I've been actually waiting for the crude oil to climb up over 35 OVX. At that point we get that movement that becomes easier, more fluid, more momentum. During COVID we had like 45, 47, that was insane. But 30 is still, like, it's okay. You saw yesterday we had like about 200 and something tick moves. So that was good. That was nice. I wasn't in on it. I actually, for now, don't have the NYMEX data because I'm just waiting for better conditions. So for now, I just want to maybe focus on metals mainly. And I've been doing the London session. So I'm liking the London session for now. I'm not saying the London session is always lively, but in the recent times, it's actually been pretty good for copper trading in particular. So yeah, until that climbs up to about, well, at least like 33, 34, just to get somewhere near that point where I've noticed that we get those nice movement, I'm kind of sticking away from crude oil for now. A2, DY, 2, DZ. What are you, like a droid? That's an interesting username. A2DY, 2DZ. Which instruments do you recommend we trade during London? I've been trading copper. So you can see my stats on Topstep. I've been actually posting these on Twitter. This is all copper. Maybe, I think 3 trades with GC, so gold, and they did not do well. All of this has been copper, right? So about 90% copper, 3 GC trades, 90% copper. So yeah, it's been, it's been pretty decent, right? I can't complain. But I wish my live account looked like this. Because I actually locked up my live account to only trade New York, so I'm really reconsidering that. Yeah, the idea is to get like some proof of movement and concept on this this particular thing. I'm up at 156, so I'm getting close to target here. Not going crazy, not oversizing, not rushing things, just letting it all play out, because we can't control how much movement we're going to get, especially not for London. And yeah, I'm just kind of taking it as it comes. So for me, copper has been really good. And that's because of Carl Hungus. So thank you, Carl, our resident wizard and meme lord, who actually said, "Hey, Dee, have you looked at copper?" And I went, "I have not." So here we are. Right, let's see what else. Now, I know that YM has been moving for London too. Not being that lively today, but let's have a look at some levels. All the equities today are below value. That's for London session only. And I use the value area as a short in London. somebody has been saying that there was a rotation from some of the other equities into Dow. I mean, it's possible. Because all of the other equities, so if we compare NQ, this is NQ, so clearly went down on the weekly now. But coming up to a very important decision area here, this is a demand level. So if we cannot defend this, we might have some more downside, but for now it seems to be defended. There are some buyers that are stepping in, visible on the weekly chart, which is a pretty big thing, you know. A weekly chart takes a lot of trading information to actually show up a move. So whenever I'm trying to sift out like the big long time frame picture, I will always look at the monthly and the weekly charts. Not for like trade locations, just more for like chart location and potential direction indicator. But I would never go, hey, we have a weekly demand, let's go long. You're going to need a bazillion tick stop to do that. So not a great idea. This is why we have to zoom in and to have tools to be able to zoom in to that day time frame and really kind of go very granular. But yeah, if I look at the weekly chart on NQ and then I look at the Dow, clearly Dow is still in an uptrend. Whereas NQ, a bit shaky. Is it the semi-apocalypse? We'll see. The second coming of Trump. So more questions. Okay. Do you know how to set multiple profit targets on a trade? So after you're in a trade, you can just walk away and let the trade scale out. If we hit different levels, yeah. So you just do that with manual orders. I don't really use that functionality much because I'm currently not trading any size that requires that. But I was doing that in the beginning because I was trading like 3 lots and stuff. So you have to click. I can't do it now because I don't have more than one contract and I don't want to get out of this at the moment. But basically what you would do, you would click on the opposite side of the dome or on the chart. You can right click on the chart. Let me try moving this all the way down and then I can sort of show you. So let's imagine that I'm in 2 contracts and you want to scale out when this copper trade, let's say, gets to 0400. So just slightly lower here. Hopefully it doesn't do that very quickly. What you would do is you would set the size of the contract that you want to exit. So you see this limit buy. So if you're in a short, it's always going to be the opposite order, right? So you go, if you want to scale out of 1, limit buy at the price where you want to exit, and you can just partial those however many times you want to exit at price points of interest. So that's the easiest way. Another way, if you want to do it manually, now I know that you asked about walking out and just not looking at the trade, but if you want to do it manually, like let's say, oh, you know, I want to take some profits here, then you might want to just do an opposite order on the dome. So you select the size of the contract that you want to scale out of, so make sure you do that. And then you click the opposite order as a market order, and that will take out a partial. So hopefully that helps. SFT says, where are you based, Dee? What continent? United Kingdom, the British Islands. So basically it's London. I'm currently in London, but I'm thinking of moving to West Sussex, which is kind of about an hour out from London. I've lived in London now for, about 23, 24 years, something like that. I came here to study in like sort of early 2000s. And I had family here and my sister was born here. I spent some time going to school here when I was a kid as well. So it was kind of like my second town. But I am originally Yugoslavian, because when I was born it was still Yugoslavia. which you can imagine was quite some time ago. But yeah, I'm in London, UK. Yeah. Carl says, CL was my secondary market until you moved away. I started getting smoked too. So I started looking at silver and copper. I mean, Carl, you know, gold was always my secondary market anyway. Those were my two things. So I was always like more commodities focused. Metals and energies. That was something that I gravitated towards. That was something that I knew a lot about. And yeah, it was... let me see where my original target for this was. But yeah, crude oil just completely died on us back in like, I think it was mid-February. And sometimes it can do that in February anyways, because my last February previous year was also not great. But then the volatility never came back. It was just like steady things. So I've gone through a very interesting year that I haven't done probably since 2012, since Forex died on me, because I was a Forex swing trader for about 5-6 years, and I did very well there. This is how I got to be in prop, because I decided that I was good enough, building up my account from like nothing up to like $250,000 in the space of a couple of years. And then that kind of kept growing, and I thought to myself, okay, I think I actually really like this, so I want to make this into a career. Up until that point, I was a session musician to a pretty high level, and I kind of fell out of that whole story. There was a credit crunch, and things just didn't gel anymore. And I was kind of getting a little bit older, so not enough energy to hop around the world, constantly traveling, constantly being on planes and buses and everything. So I was looking to get out. And I found trading. So for the first 5 years, it was great. And then 2012, the European austerity measures started happening. And for the first 2-3 months, everything was great, and then it got locked in. So you know how crude oil was like 100 ticks, 115 ticks. Forex went from 150 ticks on average down to 40 in a day. It was so painful. So for about a year, I tried to make it like myself, just to see. Okay, I think I'm gonna exit this now, because I'm not. We're coming into Asia low, right? So this is what I'm looking at here. Just try to do multiple things at once. And Asia low, if we don't break it, that is actually a pretty good reversal area. Any kind of a supply or a demand coming from that. If I show you here, that's kind of what happened this morning. We had what I like to refer to as offspring supply reaction. So we had overnight, Tokyo starts, they tried to go higher, failed. So considering that this is summertime and that we could be stuck in a range, we had some single prints left behind. So there is some possibility to have a continued movement. I just don't like it that it just crossed over the 9 EMA with quite some strength. So I'm going to give it maybe another 30 seconds or so and then just get out. By the way, if you hear noise in the background, we have a contractor in, so I do apologize, but I couldn't get I didn't want to go back into that horrible little room. I just couldn't do it. All right, let's close this. So stress-free. Right, so not the biggest day. I might get another opportunity later on, somewhere from the average session range low maybe, but 290 for now, more of a scalp than anything. I want to see what happens around this Tokyo low, and then we start pinging back towards the other side of things. There could be a better trade opportunity later on into the overlap, but not past it. So once COMEX opens, I'm not going to be trading copper. I kind of doubt that I'm going to be trading my live account today either. So yeah, this might be the only trade I do today. I don't want to fade this because we have single prints. That's a strong auction. But Asia low so far, slow to give us the follow through. And in fact, if I show you what equity volume candles are looking like, this is quite a lot of volume here, so I'm going to close that out in the combine over here too. And that'll be it. All right, so to continue my little story, basically I spent a year trying to do intraday trading by myself, going from swing trading down to intraday. And I just couldn't work it out. It just wasn't working for me. So I decided I need help. And I wanted to go somewhere where it was like the hub of prop trading. So we did have like some prop firms in London, but that wasn't it. I wanted to go to the core. So I found a company in Chicago that was doing sort of programs and apprenticeships, and I paid a lot of cash for that. And then you would have a chance to get a funded account. So I ended up staying there for a few months, but Chicago just gets really cold. So as the winter sort of set in, I was just like, no, I'm going back to London. And then I was looking for some other prop firms, kicked around some prop firms over here. And eventually I actually looked for Chicago remote prop firm and came about Topstep. So that's how I ran into Topstep, and that was a long, long time ago. And then I deepened my knowledge with Profile with Hoagland, because he's so amazing at just explaining things. And, you know, he remained my mentor to this day. So Hoag is awesome. All right, let's have a look at more questions. What is your monthly target in percentage? Sharon, that heavily depends on... First of all, I don't have a target of any kind, monthly, weekly, daily, because we never know what the market will throw at us. Working with targets, I found that most people, when they have a target, they will try and chase it. So day doesn't go well, and they're like, I have to make $1,000 today. And then they are down 200. They're like, oh no, I have to make up the 200 now. So they size up, then they put themselves into some more holes. And then... what happens? Daily loss limit, maximum loss limit, done, right? So targets in my coaching experience have been very detrimental because they force you to trade your P&L. So for example, if I was freaking out today and going, oh my God, 156, so I'm so close to the target, you know, I've only got like, you know, 2.8K. Why don't I try and make that up? Let's whack in a 10 lot position to get there as quickly as possible. Like, that's counterproductive, and that's something that for sure is going to make you stay in longer, doing combines, resets, everything. So every time I rush, I find that passing a combine takes 10 times longer. So it's kind of a false economy. Size up to pass in 2 days, and then 10 days later, 30 days later, 2 months later, 6 months later, you're still in a bloody combine. So it's like... it's better to take it slow and steady and just to chill and figure out exactly how to have a plan behind positioning and what's good enough to kind of pass the combine from anywhere. Like, look, I've been in this now for however long. 1, 2, 3, 4, 5, 6, 7, 8, 9 days I've been in here. And, you know, it's been a pretty smooth equity curve that, you know, like there's no stress, and I don't want to do anything stupid at this point. So I'm being super disciplined, you know, trading London, leaving it alone. I'm not even locking it up for London, for New York, because I just don't, you know, this is like an experiment that I'm running. I don't need to lock it up because I'm not tempted to trade it. I don't want to pollute my data set with New York session that I know has sucked for me. So... I want to see how London works. You know, it's a forward test of a data collection and, you know, aggregating information and how setups are working in the live environment. There's no rushing. And in fact, I would like to see, you know, at least 3 to 4 weeks of this before I'm like, okay, this is definitely working. Let's now take this to live, right? This is where the naming of the sessions is so cool. Because now even if I get like more combines here, I'll be like, Well, which one was the one that I was doing for copper? Oh, that one. Okay. Very nifty little feature. So my monthly target percentage. So whenever I'm trading larger accounts, so not talking prop accounts are always more aggressive because you can always start again. You know, whatever happens, you can always just go, okay, I'm going to get some more XFAs. I'm going to get more this, more that, you know, start another combine. There's always like a potential to start all over again. So it's not a disaster if you blow out of a live account or blow out of an XFA or whatever. So there is that amazing opportunity that we never used to have before. Because if you blew out of the real prop firm back in the day in the office, they would march you out the door, right? That would be your career over. Like, go and find somewhere else. There was no like resets. Like, what reset? What? So yeah, the fact that we can try again, that means that we can size up a little more. Now, you know, I'm not in favor. I've never been, like, my risk appetite at this point doesn't allow me to just go, hey, I've got a 4.5K beginning sort of drawdown. Let's put in a 10 lot size. I am just so uncomfortable doing that because I know it's not going to last long. So basically, as soon as the first trade doesn't work out, I'm already like deep in the hole and I'm going to need to reset. Which, you know, is fine, but I don't have 70, 80, 90% accuracy. I'm not a scalper. I go for higher risk reward. So in order for me to successfully apply my methodology, I have to have enough room in my DLL to be able to try a few things before I get the one that works out, okay? So, you know, I do feeler trades, right? So I frequently get hit by about 170, 220. And then if you know, feeler trades don't quite go right, if I'm on a huge size, I'm done for the day. There's no more trading. Like, that's, you know, that's it. So for me personally, I do size up a little bit, but maybe if I see a very good setup, I might try a 3 lot in the first trade. But if I'm in a new XFA, I literally start with either a micro or like 1 mini. So it depends on the size of the XFA. So if it's a 50K, I will start with a couple of micros. If it's 150K, I will start with 1 mini. And then try to just use 170 bucks per trade in order not to dig too big of a hole for myself. So the idea is to not get too close or anywhere close to your daily loss limit in the XFA, especially in the first few days because you don't have a buffer yet. So if you do get smacked on the face with a DLL, that's game over. You will blow out of the account. So typically I like to divide the XFA daily loss limit by 10. And that gives me 10 whole days to mess it up. Which is not unheard of because as I've found out in the last week, I've actually had like 5 losing days on the bounce, which is crazy. And yet, for London, I'm having a ridiculous run. 1, 2, 3, 4, 5, 6, 7, 8, 9 winning days. So which one is better for me right now? Well, London, clearly. So this is why I'm going to wait for some better market conditions because New York has been tough, man. Like, I've really found it difficult in my instruments to get anything out of it. Like, I literally enter a trade and there's nothing. So I'm like, is my internet on? Like, what's happening? It's been so trying and mentally draining that it's, you know, it's not, it's probably the summer. It's probably the summer, but it also could be like some geopolitical risks that have been happening recently. And rather than giving more volatility, they seem to be locking it down. So that's the slightly odd part. This is why I've gravitated towards looking at VIX. So OVX for crude oil. There's like equivalents for all sorts of products, and then just picking those products that have the highest volatility index for this particular period. And that obviously worked because, when Carl said look at copper, the first thing I did was to look at the volatility index, then to go to my charts and to see what the session ranges are. And then I did a little back tests. So I did probably about 6 months worth of back testing to see whether my levels even work there. And then we started the London session, and that's why I was like, okay, after that first day, I'm pretty confident that copper will be pretty decent for London. But obviously markets are ever changing. So this is why we have to have tools that will allow us to keep a pulse on what kind of volatility are we in at the moment. Is it a day trader's market, or should we just cool off from that product for a while and then wait for better conditions? Juliano says, from which moment you decide that it is too late to jump into a trade? Okay, so that's not the way I trade. So I always have, if we have Coach Jay here, he will be able to tell you the same thing. You can't plan out levels on the fly. Before I even came to this session, while I was drinking my coffee and getting ready, I already saw that we opened below value. That was one of my areas of interest, and that it turned around, and then that was my first level of interest. My second level of interest was the initial balance low with VWAP. So again, I know exactly at which point I want to get involved, and to me, I've never been late into a trade. Never. If the trade is going to work out, I have trades that outright don't work. It just smacks me in the face. That's it. And I've been in early on trades. That tends to be more my issue than being late in on the trade. But it sounds like you have a problem with hesitating and you don't have a clear trigger signal that's going to take you into a trade. So I would work on that, Juliano. So for example, if you are looking at entering from VWAP, let's just have that. So you're entering from VWAP. Let's say that this goes all the way up to VWAP and then does a reversal. That should be a trigger. It's reversing at VWAP. That is your clear-cut trigger entry signal. Now, ideally, I like to see it with some volume as well, which is why I use the equity volume candles. And because of that, it's very important to define your entry triggers. For example, when Dakota is talking, he has his 3-bar entry reversal. He sees a 3-bar entry, he goes in. For me, it's more either 2, 3, or 4 bars, because I have probably about 4 patterns that I look at. So it's bearish engulfing as the primary one, with some equity volume candles to support the move. So the engulfing candle on a very long time frame always has to be very large, and it has to cross 1 minute 9 EMA. So that's my trigger signal. Or you can have a consolidation followed by engulfing. That's the same thing, but with a bit more accumulation before we actually get the main move. I also have morning and evening stars, which are actually 3-bar reversals. So it's the same thing. And then a twist on that, 3 inside up and 3 inside down bars. But all of it is 3-bar reversals. So, you can basically spin it all under that one little entry signal. So if you don't have that, and if you're just going, well, it's at my level, when do I enter? That means you're hesitating and you haven't developed your skills enough to actually methodically, clinically go, bearish engulfing, go. You have to be like a piece of code. When you're coding something, I don't know whether you are a coder or not, but when you're coding something, you can't just give it a wishy-washy entry instruction and say, oh, when we reach VWAP, enter. No, you ideally want to define whether something is rejecting or going through a level. So how do you define that? With price action. It's like the easiest thing to do. So basically, whenever I'm writing a piece of code, I have a level, and then I write a code block that says, once we reach this level, stop monitoring for next candle to close lower than previous 30-minute candle. I'm kind of simplifying because I don't want to throw code at you, but it's like previous candle close, higher or lower, depending on whether I'm looking for bullish or bearish engulfing. And it's like a really clear-cut entry signal. That's the way my brain works for levels. So I need to have a clear-cut entry signal. Now, if I miss it, I miss it. That's it. Like, you're not going to be chasing. I hate chasing. Like, I stopped chasing things, I don't know, probably about 7-8 years ago, because it doesn't work. You widen your stop, so therefore, if you want to go in with the same risk, you're immediately increasing your risk. I'm very uncomfortable with that. Like, even if a trade, I would rather have a trade not work out on the initial risk that I assigned it. And, let's say I'm looking for a swipe through these lows and a reversal, like just hypothetical. I'm looking for a long, looking for a stop run below 404.95. So when that stop run happens, I will try to go in long, for example, if it's at the right area. We have Asian session low. It warrants an attempt of a stop run and a reversal, right? So if I see that, I'm going to bloody try that trade. And if I get smacked in the face because they decide to just run me over, that's absolutely fine with me. I would rather have that happen than wait and wait and wait and then be all the way up in the middle. And now I'm like, well, now I'm going to need a bazillion tick stop. Oh, God. And my risk reward is crap because like VWAP is just up here. There's a mean reversion trade. I have no room. I'm very careful with the types of trades that I take. And this is why my accuracy, look, I have times when I'm smashing it and my accuracy is like 70%, right? Very rarely over that. I've maybe had 82%, in very isolated few weeks. It is not a statistical average for me. Usually, I float between the 43% up to about 52%. That's like my baseline accuracy. And that means that I have to have a higher risk reward. Otherwise, the math is not going to work. So I go for a default of 2R multiples to make twice as much or more in certain situations. Or more is when I can lower my stop size in relation to the structure that we have. So I have the default stop loss size, and I still, from the default stop loss size, I still don't change the 2R target, but obviously if I have a smaller stop loss, the same target, that increases the risk reward. So I'm not breaking the structure nor the system that I am working inside of. It's just flipping between smaller stop losses because the structure has enabled me to get a better trade location. Hopefully that makes sense, okay? So you have to have clear entry signals, so start working on that. There we go. So Coach says the same thing. I want to know where to look for opportunity, then have a go signal. Absolutely super, super important. So Alexander says, but if the trade goes against you, you can get stopped out, and then the partial orders will sit there. Well, yeah. You can't just walk away, right? It's like, you have to, this is intraday trading. It's not swing and position trading. You can't fully walk away from the market if you're partially orders. So if you do get stopped out, yeah, you will have orders that will need clearing out. So unless you have mobile, Topstep is mobile responsive, so you can't kill those orders on the fly. You can, even if you're in the office, because, I did used to work for a whole year. I decided to go to an IT recruitment agency to learn how to recruit better. And I was still trading. And, I would have my phone and I would just check what's going on my phone. And I would kill the orders. So it's, you have flatten all button for a reason. Yeah. So we can't walk away fully from a trade. You still have to make sure that, the trades are there, especially if you have stop losses that are fairly small. So let's say on copper, a fairly small stop loss, I would consider 10 ticks. Medium stop loss size, I would consider 17 to 20. And then a pretty generous stop loss for intraday, I would consider 35 ticks. Now on 35 ticks, you should be able to handle most of the intraday whipsaws and movement that it does without worrying that your position is going to get stopped out. So your sensitivity to the intraday movement will reduce the larger your stop loss size. But if you're using 10 tick stops in a larger position size, obviously you can get whipped out immediately unless you catch a runner right away. And if you're trading something like NQ, it's going to whip, right? So we have to be a little bit more realistic how we're going to manage positions. We cannot fully walk away and not look at the charts at all. Put things in perspective, please. So I hate to be like the bursting your bubble sort of thing. Set and forget, set and forget. I hear that a lot. Do not set and forget intraday orders. That is a terrible idea. Can you share how you are journaling, improving your playbook to improve accuracy? I'm actually at the point where I'm not actually doing that much to improve accuracy because I feel that my accuracy is actually not bad at all. The problem with me has been that my markets have slowed down and I am refusing to move to NQ because I hate it and I know that I will suck at it anyways because I'm not an equity trader, right? I trade ES towards the end of the day and that's it. But I don't like trading it at the open. I don't like trading in the first part of the session. And then we have a lunchtime hour where everything just goes flat. Whereas in some of my products, it's actually quite the opposite. We have a little bit of craziness. Then we sort of have a reversal. And then lunchtime hour offers yet another reversal. And then into settlements, we have another reversal. So it's a very kind of structured thing. I find equities a bit unstructured in that way, where they're sort of a bit random and, the random times of day. And sometimes you have failed auctions at like early part of the day. Other times they don't happen until power hour. And to me, it's just as a systematic trader, it irks me. So I'm very OCD when I'm looking for setups. And if they don't happen at the pretty similar amounts of time or times of day, I get on tilt immediately. But my issue has been that volatility has just not been that great in a lot of the products that I'm trading for the COMEX session and NYMEX session. So it's nothing to do with accuracy. I've actually improved the accuracy so much that I don't know whether you guys remember we did a crude oil trade, me and Dolby on the house account. Those kind of trades I've been doing on CL. So literally sniping it for a 5-tick drawdown and then for like a 3R multiples trade. So that's the sort of trades that I've been aiming for. But I just got sick and tired of doing that because I actually felt really drained doing those sorts of trades. You have to concentrate so much. And guys, I'm not that young anymore. I know that I don't look it, but I am a woman in my 40s, right? So some parts of scalping, it's a young person's game. And I'm just not at capacity anymore, or I'm at capacity. I cannot, and also my ability to learn new stuff is rapidly diminishing. I am trying to do, neural supplements and everything, but you cannot get away from aging. So at some point you have to find a style that matches your personality as well as age and mental acuity. None of us are getting any younger, right? So I hate to say it because I hate it. I don't like the fact that my big brain is no longer working at like lightning speed. I was a crazy, crazy trader when I was younger, but I just found it very difficult to work at that level now and to keep sizing up and everything. It's just like it's very difficult. So my accuracy is fine. My problem is momentum. So we're lacking momentum across the board apart from like 1 or 2 days every couple of weeks. So I'm waiting for that to come back. And until that comes back, we just have to wait it out. There's no other way. It's all a part of trading, I'm afraid. Like we have run into a very nice period in equities where everything's moving. But guys, when I started trading ES in 2014, 2013, I think it was 2014 when they put me on an equities desk. It was moving 16 ticks per day. 16 ticks per day. So liquidity doesn't last for forever. Markets change, conditions change. Keep that in mind. We do have crazy movement in equities now. Take advantage of it. Put it away if you've made a lot of money. Just keep putting away money, right? Because you never know when the market is going to slow down. What broker do I use? AMP Futures for the company account. Joshua Williams says, what is your shortened time window for London profile? That will depend on what product I'm doing. Since we're doing metals now, I will cut off the London session calculations for COMEX start time, which my time is 1:30 p.m. I have no idea what that is in CT. 7:30 a.m.? 7:30 a.m., I think. Coach J, okay. Is that, that's copper, okay. All right, let's go. Nice one. I mean, it's quite a move, isn't it? So if we get all the way up there, that would be one smashing move, man. That would be amazing. Looks good. I mean, Asia low is reactive, I'm not liking the lack of momentum right now, but, we'll see. Things pick up into the overlap. Yeah, things pick up. So fingers crossed for Coach J. Asia low reversal and back into auction fade. Hopefully all the way back up. All right, guys, that's it for today. Again, I ran a little bit over. Like, it was so enjoyable. Your questions were amazing. So thank you for that. So don't forget to check out Fast Markets today. I will be on Markets Talking with Dee very late today for my time. So that's 1 p.m. CT, 7 p.m. my time. I do believe I'm on Fast Markets tomorrow. But we decided to reduce my Fast Markets appearances because obviously I'm doing the London session, so I don't really want to burn out. So Monday to Thursday you're going to get me for London sessions, and then I think Wednesdays are going to be the new kind of only Fast Markets appearance. I mean, I sit there for 90 minutes anyways in the first part, so I kind of felt that that's probably not a bad decision. So what else do we have? We have Coach Dakota now running his sessions from Sunday through to Thursday evenings from 7:30 p.m. So he's now extended his sessions, and he is teaching all of you how to do his methodology of trading, which is an awesome idea. And yesterday in the chat, he said that he may wake up early one day and join us here for the London sessions. That would be great. I'm going to see if I can drag Coach Jay on next time if you're around. Until then, thank you for being here. Thank you for watching. I really appreciate you guys. Let's do this all over again tomorrow. Enjoy the rest of the programming on TopstepTV, and I'll see you guys very soon.